All right, so let's talk about a few of the names and some of the trends you and I have discussed before. I want to start a little macro here. Let's talk some gold, because we've been talking about the situation around the world showing signs of improvement. Gold, though, has been basically kind of flatlining now. I know you guys had a long position in gold for quite some time. So where do you land on it right now?
Yeah, so we're still constructively bullish gold. I think it's in a bull market and an uptrend. I think the concern, or I'd say concern, but I think it's been capped a bit here recently, just because, like you said, equity markets have been strong, and we've seen lower risk profiles in place. So with that happening, that kind of caps gold in the short run. But I think if you look out over the next few years, just in general, gold has been undermined for several, for almost a decade now. So you're finding it harder and harder to find new deposits. I think that's underlying fundamentals for gold is strong. And then, of course, just the whole debasement issue with where negative rates are and where governments are, and the fact that we have this like steady, slow growth that's happening. And I think ultimately, and also for defensive reasons, it's good to own gold right now.
It took off with so much power this year in the spring and summer as those negative rates were piling up. This week almost seemed kind of symbolic, though, that maybe we're moving away from that. You even got one of the original central banks that cut negative. The Riksbank is hiking. Bank of England's kind of selling their hands. Even the BOJ is waiting to pass the torch on to someone else.
Yeah, that being said, you're still in this very low negative growth story. So, I look at it a few different ways. I mean, I look at it on one hand that we're in this low growth period, and we have been for some time, and that's adding a level of stability, at least, to the overall equity markets and for global growth. But I think, again, if you believe that's going to continue for the next 5-10 years, then I would agree. There's no reason to own any type of defense. You should just be all in on equities. But my view is, there's always a chance something gives, and you see global growth start to downtrend. So to me, it's all about really the consumer. It's all about trade. It's all about the Fed. And as you've seen some of the uncertainty shy away this year in terms of the Fed, where they're not raising rates now for the foreseeable future, we've seen the inverted yield curve start to reverse in the 210 spread. And then ultimately you see this, at least phase one deal happen with China. So a lot of the uncertainty is going away, and the clouds kind of pass, and that therefore equities are at all-time highs, and people feel really good. But to me, going into the next year, I think there is room to be concerned.
Do you doubt the ability for these central banks to stay on hold like we saw this week?
Unless there's all of a sudden, if this time is different and you're going to see higher inflation levels, then perhaps. But I think ultimately we've been seeing this movie play out now for a long time, and it hasn't moved the needle in terms of lower rates equates to higher inflation. A lot of that's due to productivity, but so it remains to be seen where we go. And I think too many times right now, at least as at Livermore, like we're looking out to 2020, we're very concentrated and looking at special situations, but we do have like a macro focus on then where we're going to invest on the equity side. So you have to take that into account. And ultimately, I still think the next year or two is still filled with a lot of uncertainty out there, and gold's going to serve a good place then.
It seems like maybe there's a short versus long-term case to kind of be made for it, as well as in the short term, there's more of these assets that seem to be kind of reflecting this possible reflationary trade. You've got copper now moving to the upside. You've got crude moving to the upside. Does that mean that in the intermediate term, you're more tactical about the position, or is it just, hey, these are blips along a trend?
Well, I think it's both. I think one is these are blips along the trend, and then again with Livermore, our focus is industrials, energy, financials for themes for the hedge fund. But so we heavily invest in things like energy stocks and gold and other industrial metals even, and that's where we've done really well in the last number of years. So to me, that falls right into the theme of what we're looking for. But again, we're looking at very specific companies. So for me, we were invested in the miners, I think, as for the past 24 months, and I think some of those miners have now, doubled. So we've shaved off some positions there. We're still keeping an underlying position in gold because, again, I think as tactically as a position, gold is you want to have allocation to, and we have a pretty heavy holdings on that. And then even in terms of energy, I think it depends on where you're invested and why. And our largest holding is company Jadestone Energy, which is probably the best performing energy stock in London this year.
You guys have had a monster year. The last time I checked, you're up around 60%. I know we've got a few days left. Some of the trades we've talked about have maybe gone against a little bit lately with Tesla. Where's your position on Tesla? What do you think about this monster, new high this thing just ran to? You want to load up short again after this?
No, it's not so much loading up short. I think it's more of an issue with Tesla is there's a fundamental story, and then there's more of the path for the sort of EV market. And I think people are, in a bull market like we're seeing now, where all of a sudden you're getting paid for higher risk, higher beta trades, the trend is your friend. So
that came roaring back the last basically 2 months.
Oh yeah, I mean the stock is up huge and now up on the year after having a really abysmal first half of the year. So technically, at least from a Livermore standpoint, we were short for a year and a half when the stock was in the 300s, but we covered back in May at about $190 a share, locking in a nice gain for the fund. Of course, it rallied back, and our view is if it would rally back substantially, which it started to, we would layer back on the position, as long as the fundamentals remain negative in place. And to me, they do, but I think in the very short run, they have some wind at their sails as far as their launches, with their China facility, and some of the other things. But I think if you look much granular in terms of the balance sheet, in terms of what is the ultimate sustainability of this company, it's still a cyclical company. It's a car company. They make money by bending metal, and I think the valuation's crazy. So eventually you'll see further missteps, and I think eventually you'll see the stock crash.
Okay. Is the Cybertruck made of metal? They're going to be bending something out of that thing. I don't know what it is. I guess it's probably metal right now.
Yeah, exactly.
Let's talk about a few others, because when you talk about the energy holdings, to me that kind of sounds like it is taking part to some degree in this potential acceleration or stabilization of the economy. We've seen energy companies start to pick up some speed. We're just looking at the chart at the top of the show after crude oil bottomed out. But I know you also are active from the investing standpoint and from the real sort of tactical company involvement standpoint when it comes to some of your holdings. So how does your energy interest break down in terms of a macro sort of inflationary exposure that you want to crude, and just a specific, hey, this company can be fixed perspective?
Yeah, so this is a great question, because it plays really into how I looked at things over the past number of years, which is a lot of times as we looked at energy companies during the downturn, I like to invest during downturns for cycles. We invested in energy during the downturn of 2014. I invested in auto when GM was going bankrupt a decade ago. I made a lot of money in banks 20 years ago when I was a lot younger, doing activist investing in banks and thrifts. So to me, the energy play on the recovery was there. Oil has rallied back, even though it's still in a lower range. But the key I kept telling people is you got to focus on which companies you're invested in and why. So even on the recovery, everyone was talking about, of course, Permian and shale.
Right.
Personally, I used to invest in Canadian energy, because there used to be a disconnect on valuation between US and Canada. But I'll tell you, in the last 3 years, I haven't touched a Canadian oil and gas company.
What about US?
Same thing. We haven't invested.
Too messy? Well, these companies are going bust, even with the crude price moving up and all those shale oil getting pumped.
Well, here's the thing. They had access to bank debt, bank financing, and equity investors on the upturn. Now those investors have gotten burned. So you're seeing a pullback of capital, which I think ultimately is going to be really good for the sector, because you're going to see prices hold and potentially go higher. Okay. Similar to gold, less investment ultimately leads to higher prices. But where we've invested, again, specifically as a hedge fund, is in our largest two holdings are actually international oil companies. One, again, is Jadestone, which is tied to Southeast Asia and Australia, which is a free cash flow story. So it's not we're going to grow through production and all of a sudden, down the line, production is going to be X times. You're talking about a company that's actually generating meaningful free cash that is buying assets from the larger major players, essentially rationalizing them, optimizing them, and creating even more NAV and more value. And it's a great story. It's actually a story that we started 3.5 years ago, where we actually was an activist process. We changed the board along with Tyrus Capital. We put in a new management, which is the ex-Talisman team. And since then, we've done 3 acquisitions, and now the stock is, we're up like 10 times our initial investment. But like I said, in London, it's up 100% this year, and helping us tremendously.
Okay, one more before we let you go. On the banks and financial side, how does that factor in if you want either rate exposure, inflationary exposure? I remember you and I chatted Goldman, and I believe you were short Goldman, thinking about with the 1MDB stuff. Was that part of it?
That was part of it, and
Okay.
it's also just the theme of Goldman's trading at a normal, you look normalized, it's at a fairly cheap level around book value. But again, they have the investment banking part of the business, which has seen troubles. And I think even though you're getting this sort of bull narrative in terms of the equity markets, I'll say don't be fooled in terms of the pace of growth and the potential for margin expansion or multiple expansion on a lot of these companies. So we've seen a lot of it already, even in the back half of the year. Yeah, so for people to sit there and buy the high beta names, like we said, Netflix or Tesla, or even buy the banks at this point, to think that you're going to make outsized returns from this level, I think that's still a very cautious trade.
Everybody touts the valuation banks. It's like it's become the most consensus thing lately. Does it make sense to you? Are they as cheap as people say? Still?
It depends. So we own specific regional bank. I'll mention Bank California, which is kind of our pairs trade to Goldman.
Gotcha.
That trade has done very well. That stock, even on the year now, lately has done really well. Whereas Goldman is still up now, but fighting the battle. And I think if you go forward, I would say the place you want to be, where we're looking at least investment specifically, is even on financials, is that consolidation factor.
Right.
And again, it's a focus just on the oil companies. Geography, where you're located, why are you invested in that bank, what's going to happen, and if you can actually help push change.
So even like potential takeouts for some of these regional banks we've seen.
Exactly.
The SunTrust thing.
Exactly, and again, our history at the hedge fund at Livermore my history is that we're more activist, more proactive.